Hey y'all, welcome back. We have our lesson today about supports and resistances. This is our first lesson on technical analysis. Probably the most vital, honestly. So again, we covered our basics. We're making this house, we're doing a foundation, we're going to scaffold our way up into a successful trader. This is a very important lesson across the way. Again, the average is 20-30 minute lesson. I don't want to waste too much time talking. I want you guys to get some learning in. So let's cover today's topics. Firstly, we're going to be talking about supports and resistances and what they look like, why they're going to be straight lines, not diagonal, those are trend lines, but also what supports and resistance mean, what they're showing us, all those kinds of great things. Secondly, the price action, how previous price action is incredibly important to understanding supports and resistances, and how you need to look at 180-day chart, a year chart, 6-month chart, 3-month, whatever you prefer, but the previous price action is critically important in supports and resistances. Next, we're going to be looking at how many lines are too many, how many is not enough, is 2 enough, is 3, 5, 10 too many. We'll talk about it and look into it. Next, we're going to be talking about the foundations of risk management and risk versus reward, showing you the basic idea. Now again, we're going to cover that in a whole different lesson at the end of technical analysis, but for today, we're going to talk about how you can kind of spot it if you're trading currently, how you can use it better to kind of associate your best practices and your risk versus reward and where your stop losses should be, all those kinds of things. And then lastly, we're going to talk about how sometimes you could have 4 or 5 lines of support in one small area and how to more or less make that a zone of support, right? And kind of how you can calculate if you're more risky, you want to take on that kind of risk, or if you're less risky, you want to be more conservative. Those are the topics today. With no further ado, let's get into it. So I have some really good examples for you today of some supports and resistances. Now, supports and resistances will be applied to any single chart. If it's ascending, descending, or consolidating, this is a horizontal channel. It's consolidating. This will be the example throughout the whole day. For this lesson, it'll be horizontal charts, much easier to read. But again, this should be applied to every single kind of chart, whether it's a triangle, ascending, a flag, a pennant, descending channel, whatever it is, a wedge, they could all be used. Now, what a support area is where the price action goes from bearish to bullish due to a reversal. What happens is these areas are seen as a place of confidence where people think there's going to be a reversal because of previous price action saying so. So folks buy in, bears lose their power, bulls take over, and it goes up. Transversely, a resistance is the same exact thing but in reverse. It's an area of confidence for bears to take over, short sell, or for your bulls to sell at this area to make their profit, and then bears take over and price goes down. The best way to identify these is to find straight lines where a lot of price action stops and starts. Let's do this together with Wend, which is Wendy's. We can see we have our tools. I'm going to hit the middle on the scrolly button. I'm going to hit price level. You can also go up to here, drawing tools, price level. You can also use your usual trend line, but again, to draw a trend line, you have to kind of drag it. You want to make sure it's straight, and again, to get it straight, it's kind of a hassle, as you can see. And then you can always extend left, extend right if you wanted to. But for this, let's just use our price level tool. Now, this is where it becomes critically important for supports and resistances. What I need you to understand is that every single chart has 10, 15, possibly 20 support resistance areas. That's impossible to swing trade. That's impossible for you to be a day trader. That's impossible for you to have a life outside of the stock market and successfully trade this without being stressed every 5 minutes of the day. I want you to put 4 to 6, maybe 7 supports and resistances. What I want you to use as a benchmark is that there must be 3 to 4 peaks or reversals at a certain price level to really put a support or a resistance. If it's not evident, do not put one. If there's only 2, do not put it. I want you to put 4, 5, or 6, maybe 7, if there's 3 to 4 reversals in that area. Let's check out Wendy's. So firstly, you can see this is definitely the bottom. This is definitely the top. Now, is this a good area of support and resistance? No. If you want to wait for it to come down to 1830 again and wait for it to go to 2491, anyone who's traded more than a week knows that's not really the case. So we're going to get rid of those. Those are not important for support and resistance. We're going to scroll up a little bit to find our supports. We have one here where we can see 2, 1 and 2. But again, is that realistic for price action in the last 7 months? No. So we're going to get rid of that. Let's zoom up a little bit higher. Okay, we're getting close. And again, is that a support? Yeah, it is, but there's no price action down here besides once. So we're going to get rid of that and move up. Okay, we're getting the meat and potatoes. Right about here, you can place one. That's once, twice, 3 times. Now again, you also have over here, but again, it's consolidating. It's okay. It's pretty good action. So again, you have your support here. Let's scroll up a little bit higher. That's also a very strong support. But again, we move up a little bit higher. You can see right about here, we get all this price action, all this price action, all of this, this, and this. See how we have a lot of price action getting stopped around this area? We can scroll up a little bit higher and see a lot of it ends right about here, right? A lot of price action stops here, stops here, all stops across here. Go up a little bit higher, we can see there's one definitely right about here, right? Stops here, stops here, stops. A lot of protection here. Again, you can move it down, hit all these if you wanted to. That's okay. And then you can move up a little bit higher and say that's definitely a resistance right there. Once, twice. And again, you can move this one up, move this one down. But again, those are your basic supports and resistances. Super clear area. Now, what's the significance of this? The main significance for you is that now you know where to buy in at and where to sell at, right? You want to buy in the lower price and sell at the higher price. It also gives you an idea of risk versus reward off the bat. If you're going to buy at the middle line, right, that third one that we had, if you buy in there, what's the possible reward compared to the bottom line, right? What's the possible risk? Where's all that kind of good stuff at? This is your benchmark for those kinds of things. Let's go back to the graph real quick. So as you can see, price action goes up and down. It taps from one area to the next. And now again, is this perfect? No, this is how I would see it. I'd also argue if I wanted to kind of go back through, because double testing is always good, doing it more than once, I'd probably move this down to right about there. I'd probably move this. I'd probably move this down just a little bit to right about there. This one, would I keep this one? Maybe. I think that's pretty good. This one's probably okay to move it up just a little bit. And this one's probably okay to move up just a little bit. There we go. That's probably a much better representation. And as you can see, is it perfect? Absolutely not. It's never going to be perfect. Sometimes it breaks, and that's okay. But what I've created by this is one very crucial thing for you to understand. Most importantly, supports and resistances give you an area of reversal where it goes from bearish to bullish and from bullish to bearish. That's the biggest thing. The second biggest thing you need to understand. When you draw supports and resistances, you're making channels. These channels must have as much possibility of creating 100% moves from support to resistance and resistance to support. I'll say it again. The channels that are created by support and resistance have to have enough, a lot, or 100% of the time has 100% success support to resistance moves. Let me show you. Traditionally, people are going to be like just placing supports and resistance arbitrarily. I want you to understand one important thing, is that you want to have success from supports to resistances 100% of the time as much as possible. What I mean is that from here to here was a 100% successful move from a support to resistance. From here to here was a support to resistance, successful. Right here was a tad bit short, but again, it's not perfect. That's successful, successful. And every single time, where I go through this whole entire chart, every single time, 9 out of 10 times, like right here, it doesn't do it, and that's okay. But again, you can consider that one part of the move. That's up, that's down. I want you to make as many channels that create 100% of the move from support to resistance without overdoing it. Is it perfect? No. You can see over here, this is not perfect. That's not what you want to see. But again, you could put a support line here, but again, that would give us 5 or 6. And again, that's quite a few. And again, I would give up some of these moves to have success. And again, one could argue that's a full move, then it retracted, and then it went back up. So again, that could be considered one full move. But again, as you do this, what's really important is that you're creating channels with 100% success rates. Let's do another one. This is ATNX. It's a really good horizontal channel. It's been playing like this. So we're going to hit our middle button, price level, or we'll go over here, price level, and choose that one, or trend line is up to you. Given this, again, I could start down here and say that's definitely a support. But again, is it relevant? No. I'm going to move up. Is that relevant? Yes. We have 2. But again, I would be more interested in moving up just a little bit and seeing they have quite a lot of price action right about here. And again, this is going to give us more risk instead of by leaving this out. But again, if you wanted to, place a line there. It doesn't matter. So as you can see, you have definitely a bottom support here, a middle one, you can move up and say that's definitely support right about there, given the recent price action. Scroll up, that's definitely one. That's definitely one. And that's definitely one, right? These three down here, pretty congested. And again, when it gets to areas of value we'll talk about, you can kind of clean this up. This is definitely a resistance and a support. See how much price action kind of gets stopped and started in this area, right? You can see all that up here, a lot of resistance. And again, you can see all this consolidation over here. So one could argue, if I look back through it, you can kind of move this up and be like, yeah, it's probably good right there. That's fair. But again, then you're leaving all this area barren as well. So again, it's all up to preference. But again, the idea is to make as many 100% moves as possible, and we have that. One thing you're going to notice that's very critical is that I'm not forcing any of these. There's no forcing. There's no, I hope it does this, so I place one at the end and hope that it kind of taps off it. No, there's no cheating. I'm finding at least 3 areas of reversals at least to place a trend line. If it's not there, it's not there. Do not force supports and resistances. There must be evident areas of reversal. Okay? You're not going to try and go in between 20 different lines and be like, right there. I hope it's right there. No, it has to be very, very clear. Let's look again to make sure it's extremely, extremely clear where supports are. So looking back at the chart, I deleted some lines for you. I needed to be extremely evident where supports are, and these are also resistances. As we can see, all the price action that's over here, most of it is stopped by this line. And again, you can move it down a little bit, but again, very evident, this is a support area at the least. Price action, again, stops a lot right here, right? Price action stops here, price action stops here, price action stops here. It's a very clear area of support. It needs to be this clear in every single one of them. And again, you could put one right about here if you wanted to hit these 3. But again, I always prefer recent price action over old price action. So if I'm deciding where to place a line, I usually put weight towards the right of my screen, towards recent price action. That's more important than past price action. So if it's like not making a perfect line, it's kind of like an area, I always kind of prefer to do it towards the right or towards more recent price action compared to old price action when it comes to supports. That's just me. So again, very clear areas of support and resistance. It looks really, really good. Let's check the next one. Next is YEXT, and again, let's find our supports and our resistances. So again, you could say down here, up here, and again, that's probably a good one for total support and resistance, but again, that's not really relevant. We kind of scroll up, see we have one little hit, it's okay. But we go up a little bit higher, you can see, okay, we got quite a lot. You have this line right here, you have all this, but again, we're missing this area. So again, I'm going to be like, boop, right there. So again, we have some not perfect. It's not perfect. Again, it's not perfect. But again, you have quite a good idea of where it's first going to go. And again, zoom up a little bit. You can see right there. Again, not perfect over here. Again, it's very, very clear though. It's an area of resistance and support. Go up a little bit farther. Okay, that could count, but it's really close to our last move. So let's move up a little bit farther and see, okay, this is definitely one in this area. Given recent price action, I'll put on top of these 2. I could have put a little bit lower. But again, this is a good area. A little bit higher, we'll see this is definitely an area of support and resistance. And again, a little bit higher. You can put one up here, but again, for what's going on now, not really important. These are the big 4 lines. And again, now we have channels of success. We have a lot of 100% moves, up and down, up and down. It looks really good. What's also super great, and we talked about, is risk versus reward. If we're over here in this play area and the price just dropped down to right about here, what's beautiful about having this support line, which would have been created before, is that I know exactly where I want to reverse. If this line breaks, which is possible, it sometimes does that. If this line support does continue to break, I can set a smart stop loss based on this area. And again, stop loss is a future lesson we're going to talk about. But again, this is a great picture of risk versus reward. I want to take a second and show you why the 180 days is probably your best bet. And so let's zoom in and zoom out and check it out why. So I'm sure there's plenty of people who use the 30-day, 20-day, 10 and 5-day charts. If you see this full picture, you see how successful it is? Let's zoom in just a little bit. On a 30-day chart, as you can see, it's fairly evident. You know, it looks really, really good. You could even say, hey, by zooming in, that's definitely your support area right there. You see that? Just by zooming in a little bit, we have some good clarity. But again, do I have the full picture what's going on behind me? No. 20-day, which everyone has one of these, again, not a full picture, but again, given that we use the 180-day, we see such a beautiful, such a beautiful chart going on, such beautiful patterns. Really good channel play, 100% moves twice now. The 5-day, again, not mightily useful. And then the 5-day, 5-minute, again, you would, if you want to day trade this, you would definitely have to redo your supports and resistances. Then you can even see in this time zone, you know, that's one, that's one, that's one, and that's one, right? You could then use that to then day trade off of, but again, you're making 1%, 2% a move, not the 15, 20, 30 that we usually aim for. But again, looks really good. If we zoom out to a day and a year, again, looks really, really good. The only thing is with that market crash, it kind of messes it up. But again, in a few months, you'll be able to use this again too. But again, the 180-day really does give you a really good encapsulation of what's going on. Really nice slow moves. If you're a 9-to-5 job like I do, this is probably the best bet for you. So I have two more I want to go over real quick. This is a pretty basic idea, and that is that we have our old supports make new resistances, and old resistances make new supports. We'll cover that in the last one we're going to do today. Next, I want to show you how sometimes you need to kind of use your own preferences to make your bottom support lines and really use that for risk management and then your kind of trading strategy. Let's check it out. So this is a great stock, MSON. As you can see, really good price action up and down, up and down. We have some stuff to trade off of. You love to see it. Now again, let's just do our bottom two. This philosophy does apply to some stocks that are kind of uptrending and kind of make a staircase, which we'll get into with trend lines. But when you're in the middle, it does apply, but not as much. If we're at the bottom here, this is a great idea. Right here, you could say right there is a great support area. Is it not? I would say it is, right? Plenty of price action comes down this area and reverses. Here's our problem though. We also have plenty of price action right about, you know, this area that also reverses at, right? So which one is the right answer? Well, it's up to you, because we can also say right here is another great one, right? We have plenty of price action that made money 4 or 5 times at each one of these lines. So what do you do? And this is where you need to kind of figure out what kind of trader you want to have and what consistent rules you're going to have. This whole class is about building a house, a foundation, and giving yourself some really nice rules. I personally am pretty conservative on where I enter these trades. So of the 3 lines I drew, I'd probably be in the middle one, right? But some of you are probably a little more aggressive. You probably don't follow the PDT rule, so you can kind of get in and get out really quickly. You may follow the top line. And some of you who are very adverse to risk would follow the bottom line, right? All you need to know is that there's going to be areas of value. Given the fact that there's 3 or 4 very solid supports at the bottom here, you should choose 1 or 2 of them and trade off of those. You don't want to have just a single line. You want to make an area. And I'll show you what I would do. So given we have 3 or 4 good areas to buy in at, you know, you can even say right here, there's definitely a fine one as well, given this price action. So what are we going to do? I would definitely, if it was me, I'm trading off the middle one. I would probably not even look at these ones. Too high up, not a good value. And then this would be a good stop loss area for me. And this is going to kind of make my area for me. So I would definitely say this is my area, my support. This is my support line. I want to buy in here, but also be willing to buy into about here. So this is going to be my area of support. What I do with my areas of support, you'll see my trend lines, I make them gold. To me, this is a golden channel or my golden area of value. You could choose a color, you could do dotted lines. I do golden. This is basically my launch zone. This is where I'm going to use to really buy in with. Now, how do I play this kind of buy-in? So there's 2 schools of thought to this. You have 2 lines. I have one at about 1170 and one about 1110. This is a whole area for my loading zone and my takeoff point. I think this is an area of support, not just a line. Anywhere in this area, the stock is likely to reverse. Here's the problem. We have 9-to-5 jobs. We have things to do. We can't just check our stocks and then have a buy-in price. You can set a limit order at a certain price if you want to, and that's always great. But again, in practice and theory, based simply off price action, we have no idea if it's going to reverse at 1110, 1120, 1125, 1150. No idea, right? We can't just tell the future. What we can tell, though, is that these 2 lines give us risk management and a great area of value. The higher up the channel, in the order that's 1170, the longer we wait, the more likely we are to miss the move and take on more risk. The lower in the channel we get, the less risk we have, and the more time we have to capture the move because it has some more room to run up. It's a nice balancing act of, do I want to wait longer to have less risk and possibly get more reward, but also if I am busy during the day and it takes off without me and leaves that channel, I'm not going to buy in. That's my rule. It has to be in the channel to buy. And so that's going to be what you have to do, is find your level of comfort where you want to put the lines at. But again, looking at the chart, I would be comfortable buying anywhere from 1170 to 1115, anywhere in here. So the longer we wait, see how we wait for it to come down on the channel, right? It made a straight move in less than 2 or 3 days to take off right there. The closer to this line we are in buying, the less likely we're going to miss the move, right? But the higher up we buy, the more risk we take. The lower in the channel, the less likely we're going to capture the move, but take on less risk, because if it comes down farther, we're waiting. You could buy in lower and take off. That's why we set limit prices to avoid missing the move. You can set a limit price right in the middle, like buy right here, and you capture the whole move. This is a great example though of how to set some support areas. Usually at the bottom of your channels, you don't want to do it in the middle. You can, but again, this is really good for the bottom. Let's do one more real quick. Lastly, we have AXU. What I want to really stress with this one, again, is that you have an area of value, but then also previous price actions, extremely important as we look through this. Again, let's do our supports and our resistances. And if you didn't know, these vertical orange lines are where I bought in at. I keep these on here just so I can have reference, because I'll lose them if I get rid of them. That's definitely a support area right there. This is definitely a support area right about here. We're missing a little bit right there. That's one. This is one. That's one. And that's one. And again, is it perfect? No. One can come in and put a line there and get quite a lot of extra moves. But again, that's really, really congested. And let's look at all of it. It looks really, really good. It looks pretty solid. I like it a lot. What's important to you to understand is that if we look over here, especially in this area, is that previous supports become new resistances, and new resistances becomes previous supports. What do I mean? You're going to need to look at the old price action to really comprehend this. And again, it's a very simple concept, but I want to beat it into your head. Previous resistances will become new supports. Previous supports will become new resistances. Wherever price action has stopped historically 5, 6, 7 times, and it finally breaks above that, that line that we had as resistance now becomes a very strong support for you moving forward. Same on a downtrend. If a support gets tested 5 or 6 times and finally breaks, for that price action to get above that line again will be a very hard resistance for it. Let's check out AXU to really look into it. Again, looking at this area is almost a perfect example of this, right? You kind of break through right here. This is a big breakthrough, all these resistances, and it comes down, tests as a support. See, it goes, oh, support, tests it again, and it breaks it. Comes back up, support, resistance, comes down, tests it. You can see constantly how these old supports become new resistances, and new resistances become old supports. Every single time, right? It breaks a bunch of resistances, tests it as a support, comes down, this old resistance, tests it as a support. This old support now becomes a resistance. It breaks it, comes through, tries it again, support, tries it. This old support now breaks, and now it's going to be a resistance. See how now it broke it, now it can't get above it. Every single solitary support and resistance is going to change based on where the price is. It doesn't matter if it's been previously a really strong support. If it gets broken, now it's going to be a very strong resistance. As we can see constantly, this keeps going back and forth, and eventually it does make some more moves, comes up, gets overexhausted, and comes back down. So again, this is not exactly the greatest example. There's going to be some really, really good ones in the trendline video of this, but previous resistances become supports, previous supports become resistances. It doesn't matter if it's a very significant area, it's going to act as a support or a resistance. It always does, right? History doesn't lie to us like that. And those are the main big concepts I wanted you to get today. So in conclusion, what did we cover? Firstly, we've learned how to draw supports and resistances. We understand these are areas where bulls take over or bears take over. They're always going to be horizontal lines. Secondly, we see that previous price action is extremely important, but again, I would always use newer price action to set my supports. There's an area that's a few pennies off because the old price action is a little bit higher and new price action is a little bit lower. I would set my support a little bit lower. Thirdly, we see that there can be too many lines or not enough lines. Make sure you find at least 3 or 4 areas that price action stopped and started, at least to set a support. If it's only 2, I wouldn't consider it 1. Now you can always use that as a possible support and play off of it, but I wouldn't put a lot of weight into that. Next, we did cover that the 180-day chart is probably the best one for our kind of lessons for the 9 to 5 trader. Anything too zoomed in is great to use, but you must set the supports and resistances based on the 180-day chart or on a year chart. That's probably what's best for most people. Next, we cover that this gives us the foundation of risk versus reward and risk management. The closer to a support you can get before buying in, the less risk you're going to take, but the more likely you may lose the move, or the more likely it's going to break that support, right? So you don't want to get too greedy, and always be honest with yourself if the support's not holding. And then lastly, we looked at that sometimes on the lower part of our supports and our price action, that buy-in zone is not going to be a line. Sometimes it's going to be a zone or an area. And again, it's much more evident with our trend lines, but again, it's very important to understand sometimes supports and resistances are not going to be lines, they're going to be zones. With that being said, have a good rest of your day. Hopefully you get, lesson 10 up after this, but if not, take a few days, take a few minutes, take a few hours, relax, reflect on this, and then come back to it. But again, a great lesson on supports. We'll see you guys next time.